To discuss all of this, we welcome to our set Jim Moore. He is the founder and CEO of the Washington Institute for Business, Government and Society. Also with us, Jeff Moon is a former assistant U.S. trade representative for China. From Portland, Liang is an associate professor of economics at Willamette University, and Qinduo is a senior fellow at the Pangoal Institution. He joins us from Beijing. And Qinduo, let me start with you. First, to these accusations from the United States that China is manipulating its currency. On Monday, the yuan, it dropped 2% against the dollar, falling to below 7 yuan to the dollar. That's an important psychological barrier. But how are the Chinese responding to this allegation of manipulation?
Well, obviously, the Chinese side refused to buy this idea of naming China as a currency manipulator, because if you follow even the U.S. criteria, the exchange of yuan simply does not meet those criteria. So obviously, it's a political decision from the U.S. side. I think it hurts the U.S. more in terms of credibility, because back in May, only a couple months earlier, the U.S. Said basically, the Chinese currency is not manipulated by the Chinese side. I think for the Chinese side, it's simply there's been consistent call to exercise a little bit more flexibility, because if you set a bottom line of 7, if you don't allow your currency to fall below 7, say there's a psychological threshold, and then you are putting too much constraint on yourself. There's a too strict control of the capital outflow. That's a good job, China has done very well. But if you are too strict with yourself and then you find there's a lack of flexibility, in particular when the U.S. continue to impose or threat to impose the extra tariffs on Chinese export to the U.S. So I think it's really a timing issue of timing, and also it's a demonstration of the Chinese ability to manage well its currency.
Jim, what is your view on this? Is it a really big issue, or is it in some ways a distraction? The IMF said last month that they found China's handling of its currency broadly in line with fundamentals and desirable policies.
Well, it's ironic that during this period we are actually celebrating the 40th anniversary of the relationship between the United States and China, and I think we're probably experiencing a nadir that we have not seen in this entire period of time. China, from the perspective of the United States, has been seen at times as being a currency manipulator. But the fact is that there are a lot of things that are being brought on the table. I certainly should, would point out that if China did not step in to try to deal with some of this currency valuation, that we could have seen a free fall that would have been a disaster for everybody involved. But there are a lot of factors that are coming into play. Even the United States, the chairman of the Federal Reserve, I would dare say, would not have urged that we go down a quarter point in the interest rate if it had not been for the prospect of this trade war between the United States and China.
Jeff, what's your view on this? I mean, is this U.S. allegation of manipulation justified? The yuan was expected to lose some of its value because of a trade war that's going on.
It's not justified, and it's totally fictitious. This is Trump responding to the Chinese currency devaluation. And it was an emotional response. He did not do his homework. This does not fit the definition of manipulation. You're not manipulating when your currency, when you simply don't prop it up. But what's happened here is that Trump raised tariffs by another $300 billion. The Chinese retaliated. This was retaliation by devaluing the currency. This is similar to what happened in May when Xi Jinping went and visited a rare earths factory and very quickly reminded everyone that's a potential type of retaliation. This is now a potential type of retaliation. What I worry about is miscalculation by our leaders. I think the Chinese miscalculated. I'm not sure they took into account the possibility that Thailand, India, New Zealand, perhaps Australia are all devaluing, and we may go down a currency spiral. And I think Trump miscalculated, frankly, by, first of all, imposing the tariffs without realizing that Xi Jinping has no political flexibility over the next 2 months in the run-up to the 70th anniversary of the People's Republic. And he also miscalculated, as I said before, by not reading the definition of currency manipulation before he forced his Treasury Secretary to make an announcement.
All right, let me bring in Liang from Oregon. And Liang, how concerned would the Chinese be over what is going on right now? I mean, a weaker yuan is obviously pretty good for Chinese exports, but is it good for the Chinese economy as a whole?
I don't think so. I think there are some scholars commenting on a weaker Chinese currency will be good for trade. But in the same time, I think we have to take into account what does this do to the entire financial order of the Chinese economy. Currency depreciation, especially if it triggers expectations of further depreciation or devaluation, this is going to be bad for the capital inflows and outflows. If you look at the data, the first quarter of 2019, we have seen $80 billion of capital outflows that are not accounted for by either trade or investment. So that's obviously some sort of hot money flowing out of the country in the fear of currency depreciation. And that is more than twice the average quarterly outflows that are not accounted for in 2018. So I think it is concerning if currency continues to devaluate or depreciate. This is going to be bad for capital flows, and it's going to be bad for China's indebtedness and financial order. But going back to the point, it's very interesting that this is the first declaration of China as a currency manipulator since 1994. So the timing is very suspicious. I think it's a lot more political than actual backed by economic facts.
Right. Qinduo, one of President Trump's key economic advisors, Larry Kudlow, he's been talking about the trade war. This is what he had to say. Let's listen to this.
Pouring money and devaluing currencies is not the answer. Lower tax rates, creating incentives, deregulating labor and energy markets everywhere, and fair trade. Those are the things that our allies should be looking at. But I agree, they're in poor shape economically. We're in great shape economically, and frankly, the biggest loser is China right now.
What do you make of that, Qinduo? China in poor shape, China the bigger loser?
Well, obviously, this is for this trade war. Both China and the U.S. suffers from this trade tension. I mean, it's clear. I don't think anybody disputes with that. And secondly, it's a global economy which suffers from the tension between the two largest economies. And of course, for the Chinese side, if you look at the measures taken by the Chinese side, it's always passive in nature. China does not initiate this trade war, and China does not want to continue the trade war. But but at the same time, it refuses to be bullied into submission. That's I think both sides, you can see the political consideration. So for President Trump, of course, he wants to a good deal, and also he wants to be tough to China, given the election season is upcoming. And for the Chinese side too, it's very difficult probably to give in too much, and especially when it comes to sovereignty issues, sensitive sovereignty issues. So it's very difficult for the Chinese side to give in. And I think there's almost, you can see, a conclusion from the Chinese side that the Trump administration is not someone or some government you can do business with, because it's unpredictable and also it's not reliable. So if the U.S. side decides to hold on and to protect the trade war, I think the Chinese side, you can say it's ready. You can see the determination. Okay, let's wait. Let's just continue in the slow motion.
Jeff, the longer this trade war continues, and it's been going on for quite some time right now, what are the risks for the United States? I mean, we've seen the Dow take a few hits over the last few days.
Well, of course, there are stock market fluctuations. There are American consumers that are bearing the brunt of all of these tariffs, despite what the president keeps on falsely saying. There are farmers in different sectors that the Chinese are targeting very effectively. So there are a number of people that are being hurt, and there could potentially be political consequences for the president. He could be hurt as well as this thing goes on. It all depends how this plays out. I think the Chinese, there's a question as to whether the Chinese are waiting Trump out or not. They think they might get a better deal. I happen to think that the Democrats will be a lot tougher then they will. And I think in the short term, that we're really not going to make any progress until October 1st, when the Chinese political sensitivities dissipate. So we need to hope in the short term that we can maintain a stable situation without deterioration, and then hopefully after that we can get to some kind of serious negotiations and possibly get closer to a deal.
Jim, Jeff raises an interesting point there. Would the Chinese want to wait out President Trump? Who wants the deal quick, sooner?
Well,
President Trump or the Chinese?
I think it's important to realize the psychological makeup of President Trump in this process. It's amazing. In 1985, I hosted one of the first Chinese trade delegations to come into the United States during my years as Assistant Secretary of Commerce. And in those days, the trade relationship was $4 billion imports, $4 billion exports between our two countries. And ironically, the United States actually had a trade surplus with China in those days. As of the first 6 months of 2019, we now are in a situation where the United States has sold $52 billion in goods to China. China has sold the United States over $220 billion worth of goods. There's a lot that's transpired between 1985 and 2019. And I think President Trump came into office and certainly discussed this during the campaign, where he has been terribly frustrated, and he's almost been like a volcano when it comes to the issue of what he has referred to as the trade imbalance between the United States and China. And so I think he is prepared to wait this out. I completely agree with Jeff on the notion that going into next year's election, the ramifications of this tariff war could play into the election. The historic landscape is littered with examples of what trade tariff wars have entailed and how it does damage to both sides.
Yeah, and Jim, talking about frustration, I want to go back to Larry Kudlow, the president's economic advisor, who said that the president is prepared to continue negotiations. But let's listen to what Larry Kudlow had to say. Let's watch this.
He has said himself, we'd like to negotiate. We're planning for the Chinese to come here next month. And if there's a good deal or good progress, he may reconsider some things. But similarly, he has also said if there's no good deal and no progress, he may also reconsider some things on the other side. So we'll have to wait and see.
We have U.S. media reports here saying that the president is frustrated at the lack of progress. He would like to see a deal, and no doubt he would like to see a deal before the election.
There's no question. It would be certainly in the best interest of his reelection to be able to come up with some kind of a deal, even if it allowed for both sides to go off into separate corners. But the president is, as we all know, unpredictable. And despite certain counsel that he's given, he is his own man when it comes to making these kinds of decisions. And so I think the Chinese would be wise to understand that element of President Trump, as much as it would be best for President Trump to understand that the Chinese are going through this period of time that they've got to stabilize the politics of the country, the governance of the country, before they really can sit down and seriously discuss all of this.
Liang, doesn't that give the Chinese something of an advantage? Because President Trump is under pressure to get a deal signed before next year's presidential election. The Chinese, of course, don't have that kind of time pressure.
Indeed. I think if you look at Trump's moves in the past week and a half, first he declared another 10% of tariff rate on $300 billion Chinese imports, and then Monday announced China as a currency manipulator. And all this escalation seemed to suggest that he wanted to have a quick deal. He wanted China to cave in soon enough. But I think on the other hand, China seemed to understand this, and they're taking a wait it out kind of strategy at this point. They're not going to take aggressive movements, but they are not going to make compromises anytime soon. So I do think that time is on China's side. But on the other hand, going back to your previous question about the lose-lose situations of both countries, I think to me, one of the biggest concerns for China is that because of this external pressure, it gives the pretext for China to renege on some of the market reform and liberalization and opening. And I think that would be actually damaging for China in the long haul.
Yeah, and Yan Liang, you mentioned those tariffs, the latest tariffs that President Trump has announced. The Chinese Foreign Ministry has responded to that. This is what the spokesperson had to say. Let's listen to this.
China has always believed that there are no winners in the trade war. We do not want to fight, but we are not afraid to fight. China will not accept any extreme pressure, intimidation, or blackmail. We will not give an inch on major principles.
So listening to the language there, I mean, both sides are standing very firm on this, Yan Liang. Is this going to get a lot worse before it gets better?
I have always been very optimistic about this. I was always thinking that, the two economies are very dependent, and they both want to have a prosperous economy. But from the recent moves, it does seem that, both the tensions have been escalating. It is concerning that, because of Trump's recent moves that are very much disruptive for a productive trade talk, I feel that China, on the other hand, is also taking a tougher stance on the United States. So I do have the concerns that both sides would have to do a lot more damages before things get better.
Qinduo, as Jeff Moon told us a moment ago, the Chinese have targeted U.S. farmers. They've found kind of a weak spot there, and they've just announced that there will be a suspension of new agricultural purchases from the United States. How significant is that? And the other question, of course, is how does China make up the shortfall?
Well, this like a tacit agreement between President Xi Jinping and President Trump at the Osaka summit. That is, the U.S. will greenlight some of the sale to Huawei, the Chinese company, and the Chinese side would agree to purchase the agricultural products from the United States. As we have seen, the U.S. side, of course, facing the opposition from the Democratic Party and also opposition from the Capitol Hill. So there's not much more progress in terms of sale to Huawei. And the Chinese side, of course, if you continue to purchase in a large amount, and there's no action in the United States, and you would make fun of yourself, make a fool of yourself. So I think there's a lack of political trust between the two sides. And for the Chinese side to deal with that, you have a lot of choices, and China is diversifying a purchase for agricultural products, for example, soybeans from Brazil, from Argentina. If you look at Argentina in the first half of the year, their sale to China has increased like 18 or 20 times. And of course, from Russia, and the Chinese farmers have already been moving to Russia to plant the soybeans and other plants in the Siberia, close to China. And also you have other countries offer to sell more product to China. I mean, like India and other Asian countries. So there's as long as there's a market, I think you are in a stronger position to purchase. It's about spending your money, right?
Jim, farmers, of course, make up an important component of President Trump's support, let's say, in the country. He's easing the pain for U.S. farmers by setting up a fund. They're being compensated for the losses in export earnings to China. But is that sustainable?
It is not sustainable. I think this is a one-fer when it comes to being able to address the concerns of the farmers. The Chinese have known so well that the farmers were very much an important component of President Trump's election in the first place, and certainly a main component for re-election going into next year. But the fact is that the president has continued to lay out a story, and I don't say that in a pejorative sense, but to be able to try to frame what has happened between China and the United States over many, many years, and that his predecessors were simply not holding down the fort when it came to protecting American interests. And as a result, from his standpoint, a company like Huawei was able to take advantage of the United States in the area of intellectual property rights. The United States today stands in a position where it is somewhat of an oasis economically in a storm of turmoil economically around the world. And so when we talk about the waiting game, I think it's also important to realize that the president believes that China has had a difficult period of time. I mean, my goodness, China just now has become the third largest trading partner of the United States, and both Canada and Mexico have surpassed China. And so he really believes that he can hold on to his own going into the election year, and that that's the best position to hold.
Jeff, I think you pointed out when we were talking about this a few weeks ago that the farm lobby in the United States, they're not going to really hurt the president in terms of votes because they may be unhappy with him, but they're not about to vote for a Democrat, right?
Right. Right. But this whole agricultural question is very interesting. Mr. Xu talked about how there was a tacit agreement for China to purchase agricultural goods and for the U.S. to continue to permit Huawei to purchase American technology.
Right.
And I think it's very interesting what the Chinese have done. I'm kind of puzzled by this. The Chinese wanted to retaliate against the 10% tariffs. So they made the currency move, but they also announced that they were not going to be purchasing anything in terms of agricultural goods. I can't understand why they did that, because that guarantees that there will be no sales to Huawei of the technology that Huawei absolutely needs for its existence. Those licenses have been extended until October 18th. August 18th. On August 19th, Huawei ceases to get that technology. And I think this was a miscalculation by the Chinese leadership that they essentially traded purchases of agricultural products that they need anyway for technology for Huawei, which gets to its basic competitiveness.
Okay.
One other point that occurs to me is in terms of the time as it passes, who has more time here. It seems to me we've been very lucky there has been no major crisis that has eclipsed the trade dispute and made it impossible to get a deal. And we are on the verge of perhaps having that in Hong Kong. There are Chinese troops that are on the border of Hong Kong. If there is a crackdown in Hong Kong involving Chinese troops, forget about a trade deal indefinitely. So there's a real danger there.
All right, let me get, Qinduo, get your response to what Jeff was talking about with the United States suspending agricultural purchases and not allowing Huawei to get any more licenses.
Yes, I understand that the U.S. are concerned, although from the Chinese point of view, it's unjustified, and the U.S. has failed to provide specific examples and to make it a solid evidence to show the Chinese side Huawei has done anything wrong. Fine, Huawei is being kicked out of the U.S. market. What about why the U.S. is trying to kick Huawei out of the world market? That's simply unfair. For the Chinese side, we see the U.S. is trying to make sure that China will never replace the U.S., will never become the #1, the largest economy in the world. So we see that as also very unfair. If there's something wrong, if the Chinese side has violated any rules under WTO, fine, and do it. And file a law case against the Chinese side. If we lose, yes, we lose, and we will follow the rule. For the Chinese side, this is the big picture, because there's no trust. And the Chinese side sees the U.S. is doing everything to undercut the Chinese side, like in Taiwan, selling more weapons, and we see a Chinese hand in the riot in Hong Kong. So how do you make sure the Chinese side will believe Washington?
Liang, President Trump talked earlier about the trade war, about the relationship with China. This was on Wednesday. Let's listen to what he had to say.
China's losing they're losing thousands and thousands of companies are leaving China now because of the tariffs. And we're in a very good position as to whether or not a deal will be made. I will tell you this, China would like to make a deal very badly.
Okay, and our apologies there for that audio quality. There was a helicopter going crazy in the back there. But Liang, basically what the president said, that China is losing so many, losing thousands and thousands of companies. China, because of tariffs, and we're in a good condition, he said, referring to the United States, as to whether or not a deal will be made. I will tell you this, China would like to make a deal very badly. So the president believes that when it comes to this trade war, he's in the driving seat. Is he?
I think he's over-optimistic. He is probably just trying to say this to win some audience domestically. China's GDP did slow down in the second quarter. GDP has slid down to 6.2% growth rate, which is the lowest in 27 years. But at the same time, I think what he was saying, referring to that their companies are leaving China, I think that is partly true. But in the same time, we have to read it into context. I think this is part of China's structural transformation, that some of these companies that are looking for cheap costs to produce in China are leaving China. But because China has been taking the strategy of popping up domestic demand, I don't think these companies leaving from China is going to damage China's economy in the long run.
Right.
Now, at the same time, I think in the U.S., the economy is not really holding up as well as Trump would believe.
Yep.
The stock market has been tumbling. Last month, they lost 5% of market value.
Okay.
So I think going back to the original point, trade war is a lose-lose situation. And I just want to add one quick point about China suspending.
We've got a few seconds.
Right. Okay, China suspending the agriculture purchase. I think for one is they started to recognize that all these licenses that are granted to companies to sell technology to Huawei, they're still low tech, not really the ones that China is hoping for.
All right,
and again,
we're going to have to, I'm sorry, we've run out of time.
Sure.
We're going to have to leave it there. Thanks to all of you for being with us. That's it for this edition of The Heat. I'm Anand Naidu in Washington, D.C. Thanks for watching.